With the new year and the president talking last night, people are still looking for that big reason to be optimistic. And so many people out there have had just this tough time refinancing their loan. You know, we talk about it all the time here, not all the time, but pretty often. And a lot of people just can't get the loan they want. Maybe they've been denied. Or maybe the banks have just taken too long and they've lost a reason to keep trying and trying again. Ryan Leopold joins us from Cobalt Mortgage, and Ryan has been a speaker. He's done nearly $1 billion in loans. Welcome, Ryan.
Well, thanks for having me, Ben. Appreciate it.
Definitely. So, Ryan, let's talk about this HARP 2.0.
Mm-hmm. Well, starting, back in December, the government came out with HARP 2.0, which was a improvement to the HARP 1 version that helped people who were, underwater in their house refinance, who maybe couldn't have refinanced otherwise, since you typically need at least 20% equity in your house to do a traditional refinance. So there's some improvements to the program that have come out, and I think it's going to make a huge difference to the market. So
this is, and we've talked a little about this. We're really talking about an improvement to the previous program.
Correct.
Like 1.0 to 2.0, right? Like your
that's pretty much what they're calling
iPhone 4, and next thing you know, there's going to be HARP 2.0S.
HARP 2.0.
So tell us a little bit about, how it's going to work, and maybe let's start with what happened with HARP 1.0 that just didn't work as well as maybe it was planned on.
Yeah, good question. So they came out, and HARP's original version was intended to help up to 4 million homeowners. So Fannie Mae and Freddie Mac came out and said it only helped 900,000 people refinance. And the whole premise, again, was to help people that were underwater in their house take advantage of the low rates and ideally save them some money on their mortgage so they're inclined to stay in their house. And so the challenge was because there's so many overlays when it came to pricing, loan-to-value restrictions, and simply the process that really hampered a lot of people from taking advantage of the program. And I think a lot of people who wanted to take advantage of the program really just got fed up with the process and didn't do anything about it. So the government came out and revamped the program a little bit to help those people out.
And essentially kind of streamline. Again, we're talking with Ryan Leopold from Cobalt about it's the Home Affordable Refinance Program 2.0. Mm-hmm. And you talk about people getting kind of lost in the shuffle.
Yeah.
I think everybody knows somebody who went to try to refinance their loan and it took 3 months, 4 months. They lost their paper. It became quite a headache for people.
Yeah, and what's interesting is that, all the big banks, not to mention any names, but they're, even before the new program that's coming out, that's starting to be rolled out through February and probably more towards the end of March, that a majority of these big banks were taking 90 to 120 days in underwriting to help people get their refinances done. And then at the end, they were told they couldn't do it for various different reasons. So I think people just got fed up in the process. Not that they couldn't get it done, just the process just got too consuming for them, and they just kind of let it go. And just kind of felt like they couldn't do anything.
And people who've bought a house or refinanced certainly know that process these days. It is one piece of paper leads to another, and then when you don't get instant feedback, it's, well, I turned that in 2 weeks ago. Why am I just hearing back now?
Sure. So I think it's a combination of not only kind of being caught up in the black hole of the banks and being fed up by the process, then you take the second layer of it, is that the original HARP program only allowed you to go up to a max loan-to-value of 105%, which was great, but a lot of people are more than 105% underwater in their home, and so if you're at all over 105% loan-to-value, you just couldn't take advantage of the program. And then the next layer on that was, because of the way HARP 1.0 was designed, anytime you're over 95% loan-to-value, there's a ton of price hits, which would raise your interest rate, but you could get on a refinance. Over 105% raises it even, or up from 95 to 105, raise it even more. So if we're talking about 6 to 12 months ago, when people's rates were at 5.5 to 6, and they wanted to get down to where the market was at that time at 5 or 4.75 a year ago, then you have to add all these layers on top of it. And then they're going from 6 to 5.5. It just didn't make sense. So you kind of have all those combinations really made it so a lot of people just couldn't take advantage of the program. And that's what's nice about the new rules. It's lifting a lot of those restrictions to help people actually take advantage of the program now and really probably work.
So what do people have to, what are some of the biggest stipulations for somebody's loan so that they can take advantage this time? Obviously now the loan to value piece, or that only being 5% underwater, is gone. Mm-hmm. What is the next, what other hoops do people have to jump through?
Yeah, so the first qualification is your current note has to be owned by Fannie Mae or Freddie Mac. So a lot of people come into the misconception that, well, I make my payments to Bank of America or Wells Fargo or Chase, and they believe they're the owner of the mortgage. Most of the time, under traditional conforming 30-year fixed mortgages, those are actually owned by Fannie Mae and Freddie Mac, even though the servicer is the bank. Okay, so there's several different websites to go to, which is, there's Fannie Mae and Freddie Mac websites where you can actually check your eligibility and see if your note is owned by Fannie or Freddie. So that's the first step. Or you can actually go to our website at harpsmart.com and you can check all your eligibility there. And there's every frequently asked question, everything you need to know about the program is there. Number two is under the new HARP program, you have to at least be at 80% loan to value or higher to take advantage of the program.
Which is okay, because if you're at 80% or lower,
yeah,
you can just refinance without it.
Yeah, do a traditional refinance. So it's pretty much supposed to be geared to anybody who has, only 20% equity or, in a lot of cases, negative equity. Okay? And then they have to have taken advantage. The loan they are on now had to have been originated prior to June of 2009 to qualify for the program. And the last qualification is that they can't have any mortgage rates over the last 6 months and one over the last 12 months. So basically month 7 through 12, they could have up to one mortgage rate. But really, those are the general requirements to see if you at least start to qualify for the program. And so once you get through that, then you kind of go through the next phase as far as employment and credit and stuff like that.
And that still has that been released? I mean, how much documentation is going to be needed? Because right now, I have clients, I'm sure you do too, of people who are just simply, I don't want to do it again. They can save $1,000 or $2,000 a year, and they're done. They're like, look, I'm good. I don't want to go through the process again.
Yeah, so what we're doing for people now is the program was released November 15th. The banks really aren't, whether it be the original banks that service your loan now or banks like us at Cobalt, you can't really do it yet. So we're looking at more the middle to late March is when the program will actually be released and we can start originating and closing these loans. But what I'm telling clients is once that happens, there's going to be a huge backlog of people trying to take it. Yeah. So what I'm telling people now is get your ducks in a row now. Let's see if you qualify. Let's see if you meet all the criteria. Get on a waiting list so you can be the first person that takes advantage of it. And, like I said, because of all these restrictions are out of the way, we're taking, you're seeing people, and there's tens of thousands of people in Washington that qualify for the program, and a lot of people probably just don't know it. And they can get their rate in the, low fours, maybe in the high threes in some cases.
And really, that's a huge dollar amount, because if you're at 6 and you're going to 4, I mean, that's $2,000 per year on every $100,000 you're borrowing.
Mm-hmm, absolutely.
$400,000 loans, you're looking at $8,000 per year. I don't know about everybody in the room, but $8,000 a year I could do extra just for, refinancing. Mm-hmm. Do you think that this is going to have a good effect? I mean, I have seen so many people try to do the old one, and it didn't get done. I mean, again, these overlays and the reason, because it's just, I think we could run into some of the same problems.
Yeah, absolutely. I think the biggest thing, is give it one more try. See from day one, do you qualify for the program or don't you qualify the program?
And that's that first step. Just take that first step at least.
Take the first step, see if you meet all the criteria, and see if there's actually a value in it. And what's interesting about the program, too, is the government's and Fannie and Freddie are coming out and actually offering some incentives for people to actually refinance into lower-term mortgages, 20-year and 15-year fixed mortgages. So there's a lot of cases out there where someone can go from 6 to 3.5 on a 15-year fixed, and their payments still go down a little bit. So there really is a lot of incentives in there within the program to make it work. And, like you were saying before, the big thing is see if you qualify, see if it works, and if it does, get on the waiting list so you can be the first one to get it done.
Ryan, we have about a minute left before we have to go to break. Explain the waiting list. I mean, what does that even mean?
Yeah, so a couple things. We have a website, harpsmart.com, where they can learn all about the program, and on that program they complete a eligibility form, which you fill out the form or give us a call and we can tell you if you qualify. We put you on a waiting list, which means I'm just going to get your general information. We're going to go through basically a pre-qualification process on a refinance. Make sure that you meet the income requirements, employment requirements, idea on credit, and then really just have you on a list. So the minute we know we can do something, we're going to call you and get you into the pipeline as far as getting you closed in 20 to 30 days. And if it's done right up front, we can get it closed in less than 30 days where I think we want to avoid for a lot of consumers out there where they get caught up in the black hole, these big banks, where literally it's taken 90 to 120 days to close before the new HARP program comes out. So I can imagine what it's going to be like once these new guidelines come into play for these banks.
Well, Ryan, thanks so much for joining us. And it is certainly interesting, the concept of getting pre-approved for your refinance before everybody else jumps in. And, it's one of those steps people can take that's fairly easy to just get started. And again, that's harpsmart.com if you guys want more information. When we come back, a lot of people are starting to get in line, or I guess line up to refinance their home in ways they maybe couldn't have before. Kathleen Miller is going to join us from Miller Advisors, and we're going to talk a little bit about what you can do today to get that jump start on the rest of your finances throughout the year. My name is Ben Brash, and that was Ryan Leopold. You're listening to Brashonomics.